Hey, friend, this is your Money Minute with Nicole. Quick wins for your business finances. No fluff, no shame. It's What's That Wednesday. I know that is not the most exciting thing we do each week, but let's get into it for the week. I am going to try to keep this one kind of basic because I don't want to get too deep into tax talk about profit and loss statements, balance sheets, that sort of thing. So let's quickly just talk about the term net income. Net income. Net income is what's left after you subtract all your business expenses from your income, right? The money you took in. Income minus expenses equals net income. It's often called profit, and on your tax return, it's the number that gets reported. But here's what a lot of business owners don't realize. Net income does not always mean cash in the bank. Those numbers are not always the same. Why? Because some things just don't show up here as expenses. Things like equipment or assets that do go on the balance sheet. Not saying you don't get to deduct them come tax time. They just may get reported differently. Loan payments. You're making a principal and interest payment. That principal is not an expense. Depreciation or other tax adjustments, like those equipment and assets we just mentioned, they're just some things that may not show up as an expense when you look at your records. That may be a deduction in a different way. So the actual term net income does not always mean cash in the bank. So while it's super important, it's not the only number to watch. It tells you how your business is doing on paper in most cases, but it's not necessarily what's available to spend. But still, look, it's a great place to start because what you can see, you can improve, and it is your business. I am rooting for you. You need to know these numbers. You have got this, and I will see you tomorrow.